Hey, good morning, everybody. Happy Friday. What is this? The 23rd. Happy Friday, September 23rd, 2022. Good morning, John. How you doing there? Let's see, Larry D. That's the only names I can see right there. Oh, there we go. Goodson, Ron, Dick, Michael, Julie, Thomas, Ron, Carol. Good morning. I still have a raspy morning voice here. Want to welcome everybody. Hey, the very absolute most important thing today, the number one most important thing today is that at 11 a.m. Eastern, for me, that's 10 Central. I have to imprint that in my brain or I'll forget. This will be a members only webinar. All members, right way options, hit run candlesticks, all members, trial people, members, everybody there. Jeff Sirkin, one of our own members, will be doing a webinar on highly shorted trades. Julie, me too. I'm looking very, very, very forward to this. I truly am. So very excited about it. You know, he's got 8 topics he's covering. I'm not going to sit here and cover all 8. But here's number 1. What is a highly shorted stock? Number 10 or number 9. There's 8 topics and I'm on number 10 already. Number 8, the last one, will be he'll take any questions at any time during the presentation. Hey, I can tell you that Jeff here has been with us a bit, and this is what he does. Okay, he posts something in here almost every day, usually toward the end of the day, about a trade he's thinking about taking. And he does pay attention to those highly shorted trades. So join in 11 a.m. Eastern, the most important time of today. Okay, let's move forward here. So let's take a look at, what is it, T2122. You can see that we're very, very oversold. Oversold does not mean it's a buy or time to buy. It does not mean that at all. It just means that we're oversold. We still need to see price action and a chart pattern kick us up a little bit if you're bullish. If we take a look at T2123, there we go. And I pretty much only look at the hourly, and you can see it's still down, and the 15-minute, and you can see it's still down. There's nothing bullish here at all about that. My trend indicator here, red dots, trend indicator, long as we're under that, did I just say bullish? I think I did. I need more coffee. This is bearish, excuse me. Anything under the trend indicator is still bearish anytime it's red. When it turns green, maybe like this right here, it turned a little bit bullish up here, but it never had follow through. Yeah, I think I said bullish, sorry. Oh, okay, Carol, thank you. I didn't. I'm losing my mind. The trend indicator here, I posted a YouTube video on how to set the trend indicator up if anybody is interested in that. If you don't have the link, I can get you the link a little bit later, not right now. Okay, let's take a look at the market here. So on the weekly, daily, man, this is a rough Friday. On the daily here, I've got some targets set up here, and what was it, social media, I guess, Facebook, Twitter, I put a little video out there last night, and here's some areas that I think we might be looking at. 350, okay? Now, we can go lower, but let's climb down this tree one branch at a time. So I'm looking at 350 here. 361, this is going to be June lows. I think that is I think it's in the cards, okay? That's a bet that is looking pretty good. Now, I've got some lines up here, and I do think that, you know, we're going to see some sort of a relief rally up. This would be a nice place to go because we're down today where we are, which is, looks like we're about that 368, 85. I think I'm going to have to put another line up here for a relief rally, and it's going to be just underneath these three candles, about halfway of this bearish candle yesterday, no, day before yesterday. So really, this is going to be, I think this is some pretty rough trading for a whole lot of traders. Not everybody, but a few traders going to have a little rough trading in here, because we're going to see some choppiness, and we could see this back and forth, just until we get there, or we scoot up here a little bit. Even if we scoot up here, I'm not bullish. I mean, we might have a relief rally going on, but overall, the power is to the downside. This is one way to look, very simple, at the market. It doesn't matter whether you're looking for bearish trades or short or long trades. You can do all that you want. There certainly is a long trade to be had in a bearish market, but the power is to the downside. And I think this is one of the most powerful charts a person could have. And that is, first of all, no price action. Because price action will give us hope and give us false sense of, hey, everything's okay, or everything's bad. For instance, if we were, say, right up over here, and we put in a doji bearish engulf at this top, everybody thinks that's bad. Well, it is for a short period of time, but the trend maintained itself. Over here, if we put in, say, a doji bullish engulf, everybody thinks that's bullish, so they just start piling in when no, we should do that over here. Doji bullish engulf. Start piling in because, hey, the bottom's in, everything's cool, we're working. But no, that didn't work out. This is, I think, by and large, for most traders, whether you're looking at intraday time frame or you're a long-term trader, I think this setup right here is an amazing tool to visually see what the market is doing. The trend indicator right here, the dots, the yellow line is my T line, and the white line. Man, I'm having a tough time today. The white line is the T line. The yellow line is my 3 exponential moving average. So just putting those 3 moving averages there. We can look at a weekly chart. What is the weekly chart telling us? What is a 15-minute chart telling us? Let's see here. See? You can still see the downtrend. 15-minute, you can see that we tried to move up a little bit, but did we confirm it? No. The 3 ran up a little bit on the 15-minute. Trend indicator even turned a little bit green, but the T line never was over the trend indicator. This is just an amazing, simple tool to tell you where the trend is and tell you where the power is. So anyway, I want to talk about that just a little bit. All right. Let's go back to this, and we're on the daily. You know what? Didn't have my real time on here. There we go. There's that real time. So again, good morning to everybody. Let's take a look at a few charts. I didn't really put together a watch list as far as a hard watch list goes today, but using the scanner, I can see a few things this morning, what's going on. And let's take a look at some of these power charts. And here's an alert I have. Let me make this a little bigger so you can see it better. And this is something that should be big enough for you. There we go. This is something that I think is important to take in consideration when you're trading. You see this little area right here. Let me put a little circle around it. Let's make it yellow. Maybe yellow will show up. Yeah, yellow shows up. There we go. So we've got this. Look at this bottom number right here. See that 70 and see that 30. Now what I have here is 123 stocks. 123 stocks that are owned by 123 top stocks owned by major firms. You know, they're in the they're the ones that a lot of folks want. Okay, maybe not retail traders, but they're plugged in. These are 123 of the top owned stocks. Well, when you take a look at this, see that 70 right there? 70% are below their 20 period moving average. That's what this is. The title might not be exactly right. 70%. You know what? I'm lying to you again. 70% are red. See that number right there? There it is. 102. My bad. 102 are below their 20 period moving average. Okay? 102. 70% is red, 30% green. So where do we think the power is? Where do we think the power is? It's to the downside. So I just want to caution bottom buyers, you know, buyers that think, okay, it's time to be long. It's not time to be long. All right, it's not time. So a little bit of sound issue here. I'll try to get that fixed in just a moment here. Okay, guys. So anyway, be cautious today. Follow what the overall price is doing. So let's take a look at say SPXS. This is going long. This is going long. But what you're doing is you're betting that the market is moving down. You can see how SPXS, we've got our trend working, our power trend. Here, we can go over here. There it is. There it is. Look at that. Look how those two lines are above the dots. That shows the trend. That shows the power that's going on SPXS. If we come over here, you can see you're above the 50 period moving average. I think that's a plus. Now, do I think it's too high to be buying right this second? Yes, I do. We have to learn to buy at the right time. So follow the overall price trend. Wait for those setups. This is the chart you want on your watch list. If you're looking for trades today, we'll post some trades out there if you have the app, if you're in the room. But what we'll be looking for are those setups that are pullbacks like this right here. Let's see what else we have here. Let's take a look at MROO. Look at MROO. Look where the power is on this. We're starting to break down. See where the bullish power is? Starting to move up. See where the bearish power is starting to start? Trend indicators turning red. The T line is breaking through the trend indicator. Now, the reason the yellow line is not down there is because I have it set up for longs. All I've got to do is set this up for shorts, and boom, there you go. You can see now how the faster moving average is leading a slower moving average, and a slower moving average is starting right here, cracking down through even a slower moving average. You put that back before I forget. I'm going to turn that off. No, we'll leave that on right there. Okay, so watch MRO back to this chart. We're breaking that 50 period moving average. Target wise, where can we go? How about 21 bucks down here? Might be a few stops along the way. Might be a few places to take some profits along the way. That might be setting up here. Let's take a look at Costco. Look at Costco here. So we're putting in a little inside day this morning, a little doji here this morning. So we open up inside yesterday's candle and inside day. What does that mean? Nothing other than it's still in a downtrend. Now, we could start to put together some sort of a relief rally. I don't think that would be a buying relief rally particularly, because we're still in this major downtrend. Now, if we did something like this up and back, and then we came back up wherever that high was, that could be buying. As far as moving up goes, if we move up right now, I would be looking for a short signal to short this down a little further. Maybe right into here. But a relief rally is possible on some charts. It really is. Just make sure that you realize it's a relief rally. You know, Ed says all the time, don't be the first cowboy over the hill. You're going to get shot by an arrow. This right here, that's the first cowboy over the hill. Let it go. Let it go. If we get a sell signal up in here, now we can short. If you're dying to be long, let it pull back because it will. And then let's start looking at longs. What else is moving up here? Let's see, that was Costco's. How about some Starbucks? Some of these, you know, some of these big names we might look at. Starbucks is under the 50-period moving average. This is a short under that 50-period moving average or that trend line. Above that, I might consider a long, maybe, if it has the right setup here. What else do we have here? TTWO. TTWO still looks to the downside. Look how we flirted with that 50-period moving average. Finally gave way. Now we're below any support that might be here. Targets to the downside. Oh yeah, right into here. I think 107.60, and then we probably got to come down to those lows down here. All righty, what do we have here? I think let's call that a morning. I'll see everybody here in about 20 minutes, a little more than 20 minutes. Remember, the most important time of the day will be 11 a.m. Eastern. That's 10 Central. Looking forward to that webinar. Okay, everyone. You guys take care. I'll be back in about that 22 minutes. All right. Take care. Thank you.